Alrighty, Doc here from North America. It is Thursday. That's right. It's the one day away from TGIF. Hey, Robin. Hey, George. What do we got going on here today? Oh, King Dollar again. King Dollar. Well, I guess the markets are trying to tell us that they're going to raise the rates at least a couple times at a half a percentage point. And since our Treasury is not telling us about anything at this point under Mr. Biden about manipulation or not manipulation, at least 4 years of Mr. Trump, we had at least we had an idea what they were doing to us. But at this point in time, they say one thing and do another, so it's pretty hard to understand it. The only thing we can say very easily, very comfortably, you can see up there on J4X, you can see the Swiss. You can see the Swiss on Chicago Quant right now. It's at, highs, it's running. In other words, it's losing value against the dollar the same way the yen is losing against the dollar and so forth. The only currency that's really firm against the dollar is the currency that will not be named, the Russian Federation dollar or currency. And it doesn't let go. And it just keeps on going. Now, gold is down. At least last we looked, it was down. And oil was flat to down. And that currency supposedly is locked to it. I don't see it. They've locked that currency to the dollar now. So it's a dollar currency. Another currency on the planet that King Dollar is, basically holding up, supporting, and keeping happy. What else can we say about that? I think it's a freak out. What do you think, George? Isn't it kind of wild? There's Jordan. Hey, Jordan. I mean, the data or the fundamentals never really get out the door with this type of administration. When you have socialists in charge, they just skip by us. They don't tell us what's going on. They just do what they want to do. Whereas, when you have a free market administration, they're telling us. At least Mnuchin came out, explained to us that they they made it very clear who was on the good side and who was on the bad side of influencing their currency. I don't know how you can measure that at this point in time in the universe with quantitative easing, but obviously they had some way of doing it because he would announce it every quarter. And now we have no idea what's going on. All we see is King Dollar ripping through the roof. Crazy, huh? King Dollar just does not stop. We've talked about it for days and weeks here now. It's obvious. To me, it's obvious. Every time I say to another American, they keep on thinking that the dollar is getting killed right now. So, hey world, the natives here, they think that their currency is losing value. I'm sure you all could explain that to them very clearly, that the natives on this continent actually think that the dollar is losing value, and China is going to be the world reserve currency next week. That's what's going on over here. It's the craziest thing in the world. I go, well, dollar is at all-time highs, and they go, what? What do you mean it's at all-time highs? No. China is the power in the world now. It's getting ready to take control. It's like they trade 2.5% of their currency a day in world markets. And so, the United States is anywhere from 50 to 60% of the currency traded in the world markets. And then the eyes glaze over. That's the end of the conversation. You can't have anything deeper than that. Well, we feel that here at Dukascopy and our our webinar here every day or whatever. I know Giannis told me I'm not supposed to call it a webinar. I forget what it's supposed to be called. But anyway, our YouTube every day, we talk about reality. The markets, our success rate is close to 90% all the time. So obviously we must be doing something right, or why would anybody want to listen to us? And so the dollar is just ripping at the speed of light, and the natives here on North American continent, Americans have no clue that it's ripping like King Dollar, what it is. They might as well stop calling it dollar and just call it King Dollar. So it's crazy. It keeps on rolling. All right, let's check out the currencies, and it'll just prove our point with with a visual. There it is. That's the Swiss, and I really have a hard time believing the Swiss has some financial issues too. So it makes it even crazier. You can see it here. It has that same rocket ship look as the yen has. You see it's marching up and keeps on marching up. The hinky ashkies cannot let go. It's a very simplistic concept, but they just don't let go. It's just an average of the 4 points in space, or on that bar, let's say 4 points, open, high, low, close, multiplied by 2, then divided by 2, and that gives us the unique average. All right, from there, let's take a look at the euro, and there's the euro doing the same thing. It was nice. It was interesting for a while how the euro really battled to hold on and not break. That break that came about 4 or 5 days ago, that was like the capitulation. It's like, oh no, we can't stop this thing. It's going to fall on top of us. And that's how the euro looks at this point in time. Right there on Chicago Quant, we played with that range. Look at that, all the way back to the beginning of the war. It went down to it, stopped the first few weeks, bounced around, but the tide has taken full control, and that is the wave of the king dollar has, like an ocean wave, has washed over all the currencies. Hey, hey, hey. So that is it. I just saw Jordan say, hey, Doc. Hey, Jordan. And that is the strangest and craziest thing we have to put up with every day, is just watching that, and then having Americans try to tell us, especially the media, try to tell us that China is getting ready to take over the world in the next 48 hours or 72 hours or something like that. I heard that Xi Jinping, X as we like to call him, basically told the Politburo in China last year that no matter what number the Americans come out with, we must beat them, because we must prove to them that communism is better than free markets and free people. So there's talk of them melting spoons in their backyards and melting all kinds of metal, and then listing that as steel manufactured. I've heard that. Isn't that crazy? I mean, some of the things that they do to pump their numbers up, it doesn't matter how productive it is. If they melt everything they have and reproduce it again, they're going to say that their GDP is twice the strength that it was last year. It's a definite unique situation, especially with Mr. Biden's administration. They seem to have kind of got his little paw caught in a trap. They're seeing the $31 million that China paid them, and I say them, his son, his brother, and obviously himself. That's all documented now financially. So they're trying to. That'll be interesting. That'll be it'll be like Watergate. It'll be like 1974 all over again here in the United States. 73 and 74. It'll be like 73 and 74 all over again. So maybe it'll make Chevy Chase the vice president. They'll get rid of Kamala, make Chevy Chase the vice president of the United States, and then he can fall and bounce around like he used to do, pretending to be Gerald Ford. That'll be kind of entertaining. It's possible. You never know. All right. From there, we'll go over and look at cable, and you'll see, that. Look at that's euro, and that's euro. We're just kind of emphasize it a little bit, like it is going down against the dollar, because, like I said, here in the United States, if you talk to the indigenous people who live here, the Americans think that the dollar is ready to go bankrupt this minute. Let's see now. There is the cable right there. And you can see that it is going down again against the dollar. And let's put it over on J4X. I know it sounds crazy, doesn't it? The Americans actually think that their currency is becoming worthless. It's one of the weirder things you're ever going to hear. It's insane. That's why I do my YouTubes. See that, Janos? I remembered. I do my YouTubes to just tell you And then you look at real math that's accurate over 90% of the time or 88% of the time, things like that. And then I tell you what they're thinking here, and you go, no, those Americans are a bunch of children. That's why I always say this is like a giant playpen between the Pacific and the Atlantic. We're just like a bunch of big kids. All right. Yesterday I went on a tear about William Bradford in 1620, where the beginning began, where the Pilgrims came to America and tried to bring socialism of some form or another, and it fell apart within the first year or so. So William Bradford, the governor of the time, said, all right, we'll try something different. We'll try to make people actually responsible for the things they do. And look where we ended up. We're the king dollar. All right, now you see cable still sliding down, just getting smack-a-doodled. And you see that there too. And you can see, our work aiming down, just like the way our green lines here are going down. You see it over in J4X. Notice I changed this from white to green so that they match up. You see the volume trying to drop. And so again, I think the dollar is actually stronger today, right? Like it's stronger than last week even, right? Shh, don't tell any American, they'll be confused. All right, from there, we'll go to the Turkish Lira. And that is the euro. Let's see what the dollar Turkish Lira looks like. Dollar Turkish Lira right there. And you can see it's still hanging out on the top end of the range that we've been watching for a while now here. And you can see, oh, look at that. The weekly is drifting down. Yeah, right there. Let's see what it looks like on J4X. Right there. Look at that. That is strong, huh? But when looked at in generality of that insanity that poor Turkey had to go through before they started marrying option derivatives to their currency, they've really stabilized the thing. Then we drift to what I like to always call location. And that is, it's the Turkish Lira through the eyes or the pairs trade of the euro. And you can see there the Turkish Lira has become, let's see, so it's euros. So the Turkish Lira is gaining value because they've married a put. You buy a Turkish Lira, they give you a put to protect your purchase. So that makes it pretty easy right there. And let's take a look at it over here. I know that we were flirting with the weekly sell over the last couple of days. Let's see how it looks this morning. Right, it's right there. There we are. Yeah, look at that. Marching down. You can see we've been in the daily sell since here. And I guess if we widen this a little bit more, will that do it? Like that. There you go. You can see it's been marching down. Let's put that in like so. Right there. You see that pressure that's on it. Ooh, we got a question or two maybe. What do we see here? 47, where you been? Where you been hiding? Let's see. Ask any market-raised related question you wish. You won't find better answers. Thank you, Robin. Between you and me, there's no way one of us can't come up with an answer, that's for sure. 47 says, could you look at the Nikkei? I would love to look at the Nikkei because I'm curious what they're doing with it. So here we go. There is the Nikkei right there. Looking relatively firm for the way the currency's been moving. And let's put it up on J4X. Copper, cotton, gas, light sweet crude, soybeans, dollar index. Cool, there's dollar index right there. Let's hit the dollar index. Look at that. Marching to the moon. To the moon, Alice. Let me just, I know I'm diverting. I just had to take a look at it on a monthly. Yeah, all-time highs, baby. All right, now let's get to the Nikkei. There is, not that. That's the Nifty 50. I think that's it right there. Japan. Right there. Whoa. Let's widen that out. All right, so it's not too bad. Looks like a reverse head and shoulders here, really, doesn't it? This one right here. And then when we widen it out a little bit more, it even looks more like a reverse head and shoulders. But they've had others that have failed. I guess you could say this one right here looked like a reverse head and shoulder before all this, and then it fell over. It was nice to see the Nikkei get up to 30,000 and change, you know, because Robin and I were trading that thing when it used to be at 39,000. Remember they started the night trading on the Nikkei at the CME back in the 80s, and so you can see here it is flirting with a daily buy, and let's see, it wasn't a sell throughout all that. Went into the buy. Where'd it go into the buy? So it must have gone into the buy right there. That's 12, so it would be 18, right? Yeah, or 19. That's it, right there. So it went into the buy here. Let's put that line in there. So there's a Nikkei. Let's make sure we get it over. There was no 19. 19 was Saturday. So 18 is it. All right, so it went into the buy here. Let's put a line in there. There's your buy there. It's like the last time, 47. See that? You got to show up to make us fill in these things. Or it'd be all filled in. And then it went into a sell up in here. After that nice winner chicken dinner. All that winner chicken dinner right there. And then let's put this in there. Went into the sell right there. But you were in a weekly buy, so you don't want to take that. And did it go into it stayed in the weekly buy there. Went into the weekly sell there. Let's put the weekly sell in. And it did make new lows from there too, so that's not too bad. Took a little work, a little money management, so forth and so on, depending on the type of vehicle you use to get long or short. And then let's put the buy back in. So now there's no buy there. Where's the buy at? Remember, look at it. Red dot, green dot, red dot, green dot. So it's still in that sell all the way through all this till right there. Nope, not there. Right there. Okay, so it goes into the buy right there. Where's it at? Right there? Yeah, that's it right there. Oop, there we go. Then it fell back into the sell off of that one right there. And we were in a daily sell too. I'm sorry, a weekly sell too. So again, winner, chicken dinner. And they went smack-a-doodle down to there. And we were in a weekly sell. And now we are flirting with, we can do that cute little thing I like to put up there like that. This week we are flirting with the weekly buy. So you don't really want to be short on anything particular. So basically once this thing started lifting up, you definitely wanted to take your do-re-mi, take your king dollar and put it in your pocket. And you can see right there, right now, it is flirting with a daily buy. How's that, 47? Could you look at Nikkei? Yes, we did. See, better answers anywhere. Oh, okay, I'm just rereading. And let's do this. We'll blow it up. And there is the whole gig. Well, you can see it went into the sell there with it in the weekly sell here, too. That's a nice ride down. More winner, chicken dinner. Didn't go into the buy until there. Look at that. 2 volatility signals, but no change of trend. So that was another winner, chicken dinner. Pretty good, huh? 47? No wonder I can be so screwy and loud and crazy. If I didn't have a math that was worth anything, who would want to listen to me? Am I right or am I right? Right. If I wasn't so screwy, insightful as always. You are a gentleman and a scholar, 47. Thank you. You know, I just have a lot of fun doing this. You know that, right? I mean, I really do. It's been fun for these 5 decades to deal with the markets. We've seen it all, huh, Robin? We've seen trading eggs all the way up to trading S&P 500, trading a euro, which is kind of neat. A euro unit. That's why it's called that, because we have over at the Chicago Mercantile, we had a euro here in the States, but it wasn't the same thing. It was an euro interest rate product. So what happened was trapped American dollars outside the United States. There was actually a dollar one too, a Asian one too, a Japanese one. American dollars trapped in Japan, and they used to trade it. The difference between the cost of transmitting it over, taxation, and all that other stuff. Indeed, Robin. Indeed, we have the math. Yeppers, I agree. Feel the rhythm. Feel the beat. So, and I guess we have to, I don't want to use the word blame. I guess we have to credit all this action to QE, I guess, on some level or another. I mean, they're going to bring interest rates up one full percentage point over the next 3 months. And so money is running towards this because, now see what it would have been, England tried. England came out and said that they were going to start raising too, and they started to. And everything was sanguine, everything was peaceful. And but then the European Union came out and said, no, we're not going to even attempt this until like the third quarter. Which reminded me of Draghi. How many times did we see Draghi for a long while promise one thing and then never have to spend the money to do it? Yepper's not the beef. Are you running and hiding that you used to trade cattle? You used to trade hoggers? Are you running and hiding about that, Robin? That you were in the weasel pit? They traded weasels in there, right? Oh, no, the weasels were trading in there. That's what it was. So, beef weasels. Piggly Wiggly weasels. I guess, when we try to understand all this that's going on, obviously our math is the cleanest and truest. But what is the fundamental that's going on? I think it's well worth always talking about, trying to understand it. And I really do wish Giannis would put that video back out there again about trying to trade fundamentals. Just as a Wendy's pun, yes, indeed. Indeed. The beef. Yeah, that was a great commercial back in the 70s or 80s? 70s. Was it in the 70s? Or was it in the 1980s? Where's the beef? Definitely, our math is the beef. That's right. When you look at the Nikkei, we got the Nikkei still up there? Yeah, we do. We have the Nikkei still up there. It hasn't really hasn't taken that hard a hit compared to when you look at the currency. Where are we at in the currencies? There's the euro, Turkish Lira. Let's jump over let's go backwards. We'll go to the yen. Look at the yen this morning. It's doing another moonshot. Went into a sell here. And they even gave us a volatility signal, and they tried to drive it down, but that didn't work. The weekly could care less. I mean, the weekly's in a weekly buy from the 115s, and here we are trading at 130, almost 131 as a high now. I mean, that weekly buy signal, has not let go. It won't even, the green, not even the echo, the blue dashed line that we don't really explain too much about. I talk about it here. I like to watch it nowadays. But just the basics, the green line and the histogram have gone into the plus side. And the green line itself and the histogram, if you've noticed, is beyond the nonlinear time manifold. In other words, that mirror image lines right there. Right, the golden lines there. So that's like a standard deviation. That's a one standard deviation of my mathematics. So what you get is this situation here where it's locked. It's definitely locked. It's not letting go. It's really so the yen, as much as they did push it down, they didn't push it down that much. Let's see. 47 says, when they raise the interest rates, shouldn't the stock market go further down? Yeah, but there's we were talking about it on Tuesday about Tina. They have initials TINA. Tina is dead, and what it is the treasuries and the interest rates and relative to the natural assets or something assets. So what's happened is that bond yields have not risen it's a differential between the bond yields here in the States and the stock dividends and return. So that's why you're seeing we're in a sideways down bear market. It's nothing too tenacious. In other words, it's not that vicious. So that's a good question, 47. And when they rise, the interest rates, normally stocks will go down. But bond yields, if bond yields would go up to, say, where inflation is, 8.5%, then the stocks would go down. Thing is that they're not moving the bond yield up that much. So they've gone from a quarter point, and now they're going to go to 3/4 of a point. They're going to do a half point increase. And then from the 3/4 increase, they're going to go to 1 1/4 increase. Now, the bonds are already showing you. In other words, you look at, let's go in here and show you that. So, which one is it? It's right here. So when you go in and look at like to say, we'll go to the 30-year, and then from the 30-year, we'll go to the 10-year. So here's the 30-year bond. It yields a little underneath 3%. When you squeeze it like that, you can see it's not that much of a movement. I mean, it's pretty good move. It's gone from, like 1.6 to 2 or almost 3, like 2.8, So I mean, but again, it's yielding where we think the Federal Reserve is going to stop. So they've already put it in. That's why they call them bond vigilantes. Let's do this. Let's put J4X back up there, and we'll take a look at the bond on the Dukascopy platform. But that's what's going on there. Now that's Treasury. Is that a 10? What is that? That's it right there. Yeah. So what they're doing is, and when we go in, look on J4X, let's look at it like on a month-to-month basis. So they ran it all the way up to here, and now they've dropped it back down to there. And this is a monthly, going back to 2019. So interest rates, really, when you think about it, they haven't really gone anywhere particular. In other words, they rallied, and then they brought them back to the norm, I guess you could say. And that's they really believe, the investors, the investment funds and the mutual funds and so forth, believe that by the time the Republicans take control of the government in the next 6 months, 7 months, I guess it's like 7 months, they'll take control of the government. Democrats will try to do something. It depends on how devastating a loss the Democrats take. I think they're going to take the worst loss in history since the Civil War. But, that's 1860, and we're in 2022. So what's that, 162 years? So 162 years. So they're going to take the biggest hit they've taken in 162 years. So I think the markets are looking at that and thinking that sanity is going to come back to the marketplace. Markets like to look into the future, and they try to, what they refer to as a discount what's going on when they know that the reality is going to be something else. So what they do is it's like, what's that old saying? Something like buy on the rumor, sell on the news. So they're buying now instead of selling, because they believe that the Republicans are going to take full control of the government, minus the White House. But they're going to take so much power, they're probably going to have veto power proof in one of the houses. And that will just almost make President Biden like not even like a president. He won't have any power at all. He'll just be sitting there. He'll talk. He can sign an executive order. They can contravene in the executive order. So in other words, when you have a veto-proof majority in the House of Representatives, and the president signs an executive order to do something, they can stop it the next day. And so I think the markets are looking at that. And we've never, in our lifetime, 162 years, so in 3 generations, we've never seen, or 4 generations, we've not seen that type of power. The Republicans have not really had that much power as much as the media likes to tell us they do. So I think that's what they're looking at, is the strength of the changes in government coming. I think that's the best way to describe it. So it's buy on rumor, sell on news. A sip of the tea. All right. so there's the yen. Oh no, there's the bonds, right? So that answered your question about the bond. The situation is that the difference between bond yields and the dividends and return on equities, stock equities, is in check, I guess you could say. So they're not selling them down too hard. You like that answer? Yeah, that's pretty much it. It's TINA, I think they call it. TINA. There's all kinds of fun things. VWAP. There's another one out there too right now. The VWAP. That's a volume versus asset prices, yielding asset prices or something. It's a dollar cost averaging thing, and they put volume into it, and so they're not really reflecting that much damage. That's what it comes down to. Money managers for mutual funds and retirement funds and so forth and so on use the VWAP. So that combination of looking at the interest rates and the yield and the volume, and that's keeping everything pretty peaceful. All right. From there we go back to. Did we go back to? Yeah, we didn't do Canadian. Let's take a look at the Canadian. Unless someone wants to see something. Glad to look at something. You see again today it's higher than yesterday. It's in that daily buy there. Went into the weekly buy there. Again, winner, chicken dinner. We do show you a loss. We did have one of our products we follow. We did have one that really took a hard one on the chin a couple days ago. Or was it last week, Robin? The cattle, right? It was cattle. They gapped it down. Was that Monday of this week? They gapped it. I think it was Monday of this week. They gapped it, right off the open, and then it's been dead since. So, and then the rest of the meats have kind of joined in. A lot of them were in sells to begin with for the gap, except for front month. I think basically all of cattle got whooped on. So there's Canadian, and normally when we look at Canadian, let's put it up on J4X too. When we look at the Canadian, we're looking basically at the actions of the dollar, not the dollar. I'm sorry, the gold and oil. The Canadian has a tendency to kind of be involved in that stuff. In other words, it's the size of the country, the amount of the population, and the production that they produce in gold and silver and oil makes them a really powerful nation. Relative to their volume of population itself. The yield that they generate. I think they can generate 3, 4, 5 million barrels when necessary. And I know that they generate about 3+ million barrels right now with no problem. 4 million. If the pipeline was in, they would be doing 4 million barrels a day or something like that. So you can see here the Canadian has been moving back up to the highs there, playing the top end of the range or trying to get to it. And from there we always go over to the metals complex. That's what we do, is we dance our way over to. We go to the oil to start off with, and there is oil. Is it up or down still? It's down, just by a few cents here or there. This is the front month. It's trading. I think it's trading. What is it? It's 101.89 bid for. You can see it right there. Can you see where my arrow is? I guess not. Let's put it up on. I hate losing the Canadian on J4X there, so let's just go like that. See that 101.91 at one offered at 91, bid 90. You see it right there. And I like to keep the Canadian up there just to show you that it's moving up, and this product is moving down. It's been moving down, which is curious in its own right. And then from there we jump over to gold. See which one was down today. Was it gold? Oh, cancel. I think gold is down and silver was up, or vice versa. Yeah, it's just mildly underneath. Nothing major again. Trading at 1886. So it's going down in value. That's why it's kind of like funny to talk about the Russian currency, because if it's really backed by gold and oil, why is it going up in value instead of down in value? Because both of those things have been losing value, and the Canadian really reflects it right there with it moving up like that. So you go over to, what we do is we usually go like this. We go to the South African Rand, right there. And since gold, as you can see over here on Chicago Quant, has been going down, the Rand has to go up. That's why it's nice about being able to show the J4X chart and then our chart in the two different products. You can see that action because they follow along pretty well. And so that's where we are there. And then we go over to this one, which is totally confusing altogether. And that is, do they have a ruble? No, they don't have the ruble. Do they have the ruble? I'm not sure. They're showing a quote there, but let's put gold on J4X right there. And you see gold is going down, right? And then you go over here. And what do you see as I started off earlier in the day, or in the YouTube? The euro has been going down, right? So how can that means it's gaining value, right? It's like the dollar, it's gaining value, and so how can it be gaining value if it's backed by gold and oil? Obviously, it's not reflecting those values because they're both losing money. So instead, what it is, it's the stability of it, and it's showing you that now you have the Russian Federation currency locked to the dollar. So they're both locked to the dollar now. They're locked to the king dollar. It's crazy. So from there, we normally go to yen, but we've already seen yen. So let's go take a look at the Mexican peso, and there it is right there. You can see the Mexican peso is fighting its way to get to the midline of the whole range right there. Oop, don't want to move it, but that's the whole range from there to there. Just came again, hit the top, went to the bottom, started to move up, hit the 0.23, fell. Now it's trying to get to the 5.0. That's the 0.38 right there. And that's the 0.50. And so you can see they're flirting with the weekly buy and so forth. You know, the pressure is on the upside there. And it's interesting, you know, watching. You know, it's one thing to hear the politicians and the news media say one thing and then actually watch our work and see how our math is picking up the truth, you know, real facts, not fake stories. So now, if Elon Musk would open up YouTube, boy, how many more watchers would we have, huh, Janos? I bet we would have a lot more. I know that they pay attention. I can tell you that. I've seen that. My proof is, before Mr. Biden got elected, the Securities Exchange, the man who is now head of the SEC, would come on after my webinars every day. He had a class he taught at MIT about cryptos and so forth. And YouTube matched me to him. Every day for months upon months. Every day he would come on. And when his webinar at MIT was over with, they would start it over again. And so I was kind of like the warm-up act for his YouTube. And they would, you know, I guess it was because of our quantitative analysis. And so they didn't have many people they could match up. But the moment he became the Securities Exchange chairman, or director, or whatever they call him, all of a sudden my volume went down and they stopped matching us up. So obviously they realized that I was talking against him. When he's a professor at MIT, you know, at the Michigan Institute of Trucking, but you know, when he's now the head of the Securities Exchange Commission in the United States, they can't have someone like me contradicting some of the things he says, you know. So they just, you know, that they manipulate it just the same way that you notice all these Twitter people, you know, like people are picking up 20 and 30 and 40,000 new people a day. You know, all the conservatives now, and all of a sudden, like Mr. Obama and, you know, like Meadows from one of these networks on the left are losing like 5 and 10,000 a day. You know, so they've been fudging the numbers. They've been directing things. So imagine if Mr. Musk would take over YouTube, then maybe we would see our volume explode. We'd have 50, 60 people here, and they would be asking questions. All right. From there, that's pretty much it. We've done our currencies. Anybody want to see a particular currency? Oh, 47. Isn't it you that watches that GBP JPY? Is that the one you watch? We haven't looked at that in a long while. GBP JPY, is that what it is? It's one of those like that. I know it's yen. Yeah, there it is. GBP JPY. You'll see we haven't updated it in a while. It's still in the buy though. Last time we looked at it, went into the buy here. It's still in the buy even here, but at least it touched the time manifold now. The weekly did a little bit. Now, why is that a wrong color? It's black and white. It should be green and white. Yeah, there it is. And then you can see we went into the sell. Right? Is it there we went into a sell? Or the day before? We'll find out in a few seconds here. There's the 21st. It's the 20th. Okay, so it went into the sell right here. What is that? That's like Monday or something like that? 22nd. That must have been... that's 21st, 20th. What's the next? 25th. Yeah, so 22nd. So that's a Friday, really. That's the Friday. There is no real 22nd. I think... Yeah, there is a 22nd. So it was the Friday. So it closed in a sell there, but we're in a weekly buy. So one thing you knew not to do is be long throughout that little bounce there. And I guess if we keep on pushing on here, it'll get it back into the buy like everything else. There it is right there. All right. From there, unless anybody else wants to see any particular currency, we'll go check out the metals complex. So we saw gold. Gold is just basically unchanged, down a little bit. It's in a weekly sell for a second week now, and it's been in that daily sell since back up in here, since the 2000 area. And let's see what silver's doing. Maybe silver was up. No, they're knocking that down too. So silver's getting punished also. It's down to 23.10 or something like that. It actually broke 23 today, didn't it? 22.89 low. Ow. And that's been in a weekly sell since this cute little hump that occurred right there. Went into a daily buy. Went into the weekly sell. The math kept you out of the long side. Right? This here kept you out of the long side. The daily told you don't be short. And the weekly told you it's going down. And so you sit there for 4 days, watch it do that. 5 days, really. That 1, 2, 3, 4, 5, 6 days. You see it do the topping out there. Goes into the sell the next day with fanfare, as we used to like to say, with some energy. And then what it did is it just rolled over and died. And it was a big winner chicken dinner. And this saved you from losing your lunch money to be able to buy that chicken dinner. Let's see. From there, we've jumped over to copper. We're in July copper now. And went into the sell there. And then it does all this here. Nothing major. I mean, we're in a weekly sell there. And then it was looking stronger this morning at one point. It went into the buy there yesterday. And it's failed and it's rolled back over again. Yeah, May copper is like, I mean, like almost no open interest at all. It's kind of died down. This thing has tons of open interest, the July contract. Little hot tea again. All right, for some of you, it's cocktail time, right? So, from there, let's take a look at. I think it's time to change the crypto. The crypto is getting ready to go out the door. Also, Monday. We'll be looking at what is this? That's April. So we'll be looking at. Matter of fact, tonight I may move it to. What's that? June? No, May. We'll be looking at the May contract going into tomorrow. You can see it's had some pressure on it from here. I've heard positive and negative about the cryptos. I don't think they're going anywhere, but they just may not be gaining any real value. They may be just hovering for a while now. This might be like the 1970s, where you had the Nifty 50. We had a Nifty 50 here in the States with Xerox. In the 1970s, the number one tech company was Xerox. Mr. Gates convinced Xerox and in the early 80s convinced Xerox and Mr. Jobs that the mouse would never work and people would never want to use a mouse. And Xerox was like our number one tech company over here. And then IBM started to join in. Yeah, I mean, IBM had been around a long, long time, decades. And IBM was our other big tech stock. And in the 80s, there was a third one, Digital Equipment, which slowly got bought up by Compaq Computer, and from Compaq Computer got bought by Cisco Systems. So Digital Technologies or Digital Equipment is part of the Cisco system. Cisco, that was an engineer student who became out of MIT that advanced wireless communications and networking. And his name was Olson. And he started Digital Equipment and turned it into $1 billion company, which was unheard of for a chairman to stay from zero to all the way to the top. But that was, that era. And so it does have that feel to it now, in some ways, that the cryptos may be going through the 1970s thing. So we might see cryptos be sideways products, kind of. We may not see. It's possible, unless something horrific hits the earth on some level or another. We may not see cryptos get back up to 70,000 on Bitcoin for maybe 2 or 3 years, 4 years or 5. It could be like that. It literally could be. Money will kind of not leave it. It's just that it won't bid it up. And wouldn't surprise me any if we saw something like that, because it does remind me of the 70s when we had the Nifty 50 and the go-go years, going into the late 60s, early 70s, and it got stalled, and then it was really the 60s going into the 70s after that incredibly great explosion in the financial markets in the 50s, in the 1950s, that led us to this situation here. And then you got the AT&T created the transistor, and then in 78 or 77, IBM created the RAM chip, random access memory chip. So there was a real interesting technological jump from vacuum tubes. And so it wouldn't surprise me that, I know I've said this 3 times now, that the cryptos become kind of stalled, maybe just kind of vacillate, change the range a little bit. Maybe they support the lower 30s, maybe they get back up to the 50s, back and forth, just cruising along, but won't take off into like the 70s or the 80s, that type of thing, for a while. We'll know. The math will keep us honest in the end. So, all right, that's that one. Now from there we go. We did gold, silver, and copper. Let's see what the platinum's doing. Right there, that's July platinum. It's heading back down. Went into the sell there yesterday. Yeah, and we're in the weekly sell. Nothing major. Just kind of cruising along. It's only lost 10%, basically, maybe a little bit more than that. All right, from there we'll jump over to the energy sector. There's crude oil here. Let's put let's put Brent up on J4X. And there's J4X and Brent. You can see it's trying to weaken a little bit. We got that green there yesterday. Same thing happened in West Texas Intermediate. We got the green there, and we're still in the green now. And is it plus again? No, it's not. But it's holding up in there. And this is the June contract, which is the front month now. And we do have the October contract for some of our chart people that follow that. Let's see, where's that at? There's the October contract right there. So you can see it's kind of just hanging out in the 90s. It's being discounted by about $6, $7, something like that. There's a contango to it. So it's like 101 and change. And here it's trading at basically at 96. So that's like $5.50, something like that. And then you can see the was it right here? The Brent. We got this turning up. That's red. That's got to turn green, and maybe it'll lift it up again a little bit there. And then let's take a look at natural gas. We'll look at natural gas on here through the J4X and take a look at it here. This is U.S. natural gas right there. A little pressure on it this morning. You see it's getting close to the zero line. And but we're in that weekly buy now, a long time. And you can see here it's trying to turn up. We've had 3 greens right there. Then from there, let's take a look at European natural gas. There it is right there. It's it's back to 29. Wasn't it yesterday 27.8 or something like that? It was right around 28. Now we're at 29, so it's up a full handle again. We're feeling pressure on the downside here, as you can see. And this is still lifting up over here in Europe. They're trying to negotiate with the Russian Federation. They want to use rubles or something like that. And I think Poland told them to go fish. They shouldn't mess with Poland. There's a lot of payback Poland wants. I would not mess with Poland. I wouldn't mess with Latvia either, and I wouldn't mess with Lithuania. There's a lot of payback. There's some frustration over there about the Russian Federation and the Czech Republic and the Slovakians and Hungary. They're making a big mistake of bothering those countries. They should not bother them. Especially with all of them using NATO equipment now. They may eat them alive. And the Ruskies will be finding themselves having an issue. They're having a tough enough time with Ukraine, and the Ukrainians barely had any weapons at all. Was it Mr. Obama gave them blankets or something? They traded nuclear weapons for blankets. I think that's like the Manhattan deal with beads for Manhattan with the Indians. Let's see. You give me your nuclear weapons, we'll give you blankets. Oh, yeah. That makes a lot of sense. Let's see. Do I want that? It may be made out of cashmere. Yeah, why would I want a nuclear weapon when I could have a cashmere blanket? Yeah, for free, no less. All right. So that's the energy side of all this, too. Now, let's take a look at the equity market. We've talked about the equity market, how it matches up to the bond market at this point. So let's jump over to... There is the S&P 500. The big player. And it tried to get into a buy there yesterday, and I thought it wasn't a buy, but they took some of those numbers out of it. And you can see here, it's definitely higher today. We got a volatility signal going on, but it's still minus lots of weakness. It's lower than this area here. Again, I think it's going to be like the Bitcoin. It's going to go sideways a little bit in here. Look at it. It does really have that sideways action thing. Maybe it'll go find a new low, play the 38s or something like that, 3,800. Let's see what it looks like over here. Over here. Over there. The Yanks are coming. The Yanks are coming. Do. World War I song. There it is right there, the S&P 500. The King Dollar is coming. The King Dollar is coming. All right, that's the S&P 500. And maybe what they'll do is they'll finally bust some of this over here and bring it down a little bit lower. I mean, interest rates are going to rise. There's like a lot of, for a money manager, there's a lot of what we would call, how do they say it? They call it, I can hear the words, I can't say it out loud. Let me see. Conflicting trends or confluences. They call them confluences. Influences, in other words. Conflicting influences, and it's confluences. So they're contradictory to each other. So in other words, oh no, interest rates are going up. Oh good, interest rates are not going that high. That type of thing. Oh, earnings are going up in stocks. Oh, dividends are holding up. Oh, do I sell my stocks? No, because earnings are going up. Do I sell my stocks because interest rates are rising? Yeah. but they're not rising that high. No, it's like that back and forth thing going on. So it makes it very tough. And so that's really what's going on here. All right, shall we leave it with, let's do this. Let's leave the webinar with a quick intraday live trading for the fun of it. I always find that fun. And let's load them up. And here it is right here. This is the S&P 500 on an intraday basis, live from North America. And there it is right there. We'll make it the whole screen. So it went into the buy right there. And what did it do? It went up. Oh my goodness. It did go in the sell here and you got whacked in the head. Right there, and then went into the buy again, and now you're back in the sell right here, making the money that you lost right there. But it didn't take out all the money you made right there. So that's cool. And went into the sell right here. And there was a winner chicken dinner. Went into a buy right here, and it was a winner. Nope. Well, yeah, it did. It made just barely anything. Then went into a sell. Went right back into the buy, and you made monies there. So that's, there's a goodie right here. Check this guy out. Or gal, or whatever you want to call it. Went into the sell there, and it was like 5 or 6 chicken dinners you got out of that one. All right, we're out of here. This is Doc from North America. Same time, same channel tomorrow. TGIF, baby. Happy trails to you until we meet again. Happy trails to you, to all our trading friends.